Kaspa is under pressure again, trading at just above $0.070, and if this key level cracks, it could open the floodgates to a deeper correction. But here's the twist. Despite the bearish outlook, some smart money is still holding strong. Why? We're about to dive deep into the latest Kaspa setup, chart structure, technical signals, and what's at stake right now. Welcome back to TJ Crypto World, your no-hype zone for data-driven crypto analysis, realistic forecasts, and strategic insights to help you navigate volatile markets like a pro. If you're tired of moon boy narratives and want grounded updates you can actually trade on, you're in the right place. And if you're new here, make sure to hit that like button, subscribe, and turn on the notification bell, so you never miss a moment in this rapidly changing crypto game. Stick with me till the end, because I'll reveal the key technical level that will decide whether Kaspa heads back to $0.060 or finally reverses this brutal downtrend. Let's get into it. Kaspa price update, June 20th snapshot, current price, $0.0704, 24 hours change, minus 0.88%, RSI, 14, 40.21, bearish territory, volume, weak and inconsistent, trend bias, bearish, still under descending resistance structure breakdown, lower highs, lower lows. Let's talk structure. Kaspa has been forming a clean staircase of lower highs and lower lows since late May. That means each attempt to push higher is weaker than the last. On June 16, KOS tried to retake the $0.080 level, but was rejected again. Since then, the price has drifted lower and is now testing support just above $0.070. This descending setup means momentum is still clearly in favor of sellers. And that's confirmed by the chart action, narrow-bodied candles, long upper wicks, and low volume, all signs of indecision, and typically a bearish continuation pattern when found at support. What we nailed yesterday, in our previous analysis, we spotlighted the $0.070 support zone as the line in the sand. We said that if it failed to hold, KOS could revisit the $0.060-$0.055 area. Right now, we're teetering right at that threshold, and the market's reaction here will be critical. We also mentioned a sideways range scenario between $0.070 and $0.090 if the support held. The action has hugged the lower end of that band, with no sign of bullish momentum. This confirms we're still in a high-risk, low-conviction trading environment. Bearish dominance, technical indicators. Breakdown, RSI, currently around 40, and steadily declining. Not oversold yet, which means there's room to drop further before triggering any bounce setups. ADX, trend strength remains elevated above 25, confirming the current downtrend has power behind it. CCI, flirting with oversold territory, but no real reversal signal yet. Just because something's oversold doesn't mean it can't go lower. The bottom line? There's no clear bullish divergence on any major indicator. And with volume this low, breakouts are unlikely to stick. Trendline resistance and indecision candles, Kaspa continues to get rejected from its descending trendline. Each time the price hits that line, sellers show up in force. This trendline has now turned into a major technical ceiling, and unless KOS breaks above $0.077 with strong volume, this ceiling is going to keep holding the price down. If KOS can break above the $0.077-$0.080 range with a confirmed volume spike, we could see a short-term rally to $0.090. But nothing in today's chart supports this yet. It's a low probability setup unless the bulls show up quickly. Neutral case, if $0.070 continues to hold, Kaspa might enter a sideways chop zone, bouncing between $0.070 and $0.075 while the market waits for a stronger directional trigger. Bearish case, most likely for now, if KOS closes below $0.068, the downtrend could accelerate. That opens the door to the $0.060-$0.062 demand zone, and if that breaks too, we're likely heading back to $0.055, levels we last saw in early May. Whales are still watching. Despite the weakness, top wallets continue to accumulate on dips. But here's the key takeaway, they're not trying to time the bottom. They're playing the long game, averaging and gradually. That means any short-term bounce won't be driven by them, it'll be driven by a broader market shift, and we don't have that yet. So if you're thinking about entries, don't guess, wait for the chart to prove that buyers are back. If you're finding value in this kind of straight shooting analysis, go ahead and smash that like button, subscribe to TJ Crypto World, and drop your thoughts in the comments below. Are you holding through this drop, accumulating more, or sitting on the sidelines? Let's get the conversation going. Kaspa is hanging on by a thread at $0.070, with resistance closing in from above and momentum indicators giving zero optimism for an immediate bounce. The $0.068 level is now the front line, and if it fails, we could see accelerated losses down to $0.060 or even $0.055. For now, sellers remain in control. Bulls need a breakout with volume, not just candles with long wicks, to flip the structure. Until then, risk management is key. Thanks for tuning in to another focused analysis here on TJ Crypto World. If this breakdown helped you get clarity, please give it a like, subscribe if you haven't already, and hit that bell so you don't miss what's next. And before you go, check out my latest video on why Kaspa whales are buying the dip. There's a reason they're stacking while everyone else is panicking. Trust me, you don't want to miss that one. Stay sharp, trade smart, and I'll catch you in the next update.